Okay, it's live everywhere. So some of the friends have joined on the Zoom. So those of you who are watching it on social media or live with us on Zoom, in case if you have any questions, you can ask those questions. We'll take up those questions in the second half of the session. Also, we'll be sharing the LinkedIn profiles and Twitter handles and the LinkedIn thread of this particular session. So in case if you're not able to take a question that you ask in the session, you can ask in the LinkedIn thread and you'll get a response over there also. So it's 7:59. So one of the things we really pride ourselves is to start events on time and finish on time. So it's 8 p.m. India time, and we'll just get started. Thank you so much again, everyone. I'm Jatin. I'm one of the co-founder of eChai Network. So this particular program is part of the CoRise Summit, which eChai Network and the Vadhwani Foundation is organizing. Swaroop is with us from Vadhwani Foundation here. And Simran will be moderating this particular session. So Simran, if you can briefly introduce yourself and then get started. So with this, my guest appearance in this session is over. And the screen is yours, Simran.
Sure. Thank you so much, Jatin. First of all, I would like to appreciate and I'm grateful for this sort of opportunity to actually talk and moderate the session for all of the panelists here. And so about myself, I'm a community builder, and as of now, I'm working for a real estate tech startup in London, which is called Keys Community. And I just graduated from Goldsmiths University, London. So I'm very excited about VC funding, investments in diversity, and mental health and well-being investments. And that's how me and Jatin got closer, and we started actually getting along with these sort of events more often in London and now virtually. So I would like to welcome you all here. And I think my first question for you guys would be, what has been your journey in terms of being a VC? How has it sort of been like for you with a background story and sort of an introduction for you guys? So I think I would go first with Janneke. Janneke, am I pronouncing your name right?
Janneke, yes. Hi.
Yeah. Okay. Hi.
Well, I actually have an entrepreneurial background. I've built 2 companies that I both exited successfully. And after I sold my second company, I was still working at the company, but I started doing angel investments. And because I really believe that if you're successful, that's due to your own efforts, but also due to the ecosystem that's built by others. And as an entrepreneur myself, I know how important that first check is, that somebody believes in your plans and believes in you and is willing to put some money behind it. So I wanted to give that back to others. And so I started doing angel investments. And then when I was making plans for the next 10 years in my life, I came across Eva, my current partner in CapitalT. And she did her PhD at Berkeley and looked into what makes great entrepreneurial teams. And everybody always says, oh, the team is the most important thing. But at the same time, people are totally vague about what that means. And still, gut feel and bias are the biggest drivers for decision making in our industry. And I really believe in this data-driven approach. And I've seen firsthand how important a team is to the success of your company. So we joined forces and started VC funds.
Wow, that's quite something. That's amazing. So glad to have you here. I think Kinga, would you like to also introduce yourself and start up a journey?
Sure. Hi, everyone. Thanks for inviting me. My name is Kinga Stanislawska. I'm dialing in to the conference from Warsaw, from Poland. About 6 years ago, me and another lady, we worked together in investment banking, and we figured that we focus a lot on technology companies anyway. Our #1 area of focus was IT, technology. It was also media. And I had a lot of experience previously from direct investments across Central and Eastern Europe and kind of right up to Central Asia. And we thought it would be a great opportunity in a market that didn't have any venture, didn't have any startups, to start a VC fund. So 6 years ago, we set up Experior. It was originally the two of us, two women, which was actually, I think, the first fund in Europe that was funded by women. We originally raised 25 million euros from the Swiss contribution money and 30 private individuals. And we started looking across Poland, across Central and Eastern Europe for data-driven software startups. We've been going ever since. We have now a couple of companies that have grown 12, 15 times since we invested, and we're still there. So that's nice. We have 2 or 3 exits that we've done, to a very large strategic investor, to another one in the US, and we're in the middle of another one at the moment. And our focus is, first of all, looking at pure software, looking at deep tech, looking at more the IP that can be created with the technology, with the coding coming out of Central and Eastern Europe, where it's a stronghold for software engineers, for data analysts, and seeing how we can build bridges right across the world with that technology and commercializing it globally. So it can be going east or going west. We have companies that ended up selling via the US, some via Germany, but some others from Asia, and they're based in China. So we've actually gone both ways. And this is what our focus areas are. We very much like co-investments. We look at kind of pre-Series A, Series A projects, which are pure software, and the more deep tech, the better.
Wow, so it's more about tech for you than I am just assuming that, and it's amazing. Like, you were 2 women who started the fund, and that's incredible. Now over to you, Fida.
Thank you for having me. I was really enjoying listening to the intros, and pleasure to meet you, everyone. I'm dialing in from Jordan. Also, like Janneke, I'm also, I think, a serial entrepreneur. I've started a couple of companies in the past in tech, and I was on that side of the table, and I managed to raise capital for both companies. And I've been also active in women economic empowerment in Jordan and in the Arab world in general. I run a network that includes 40,000 professional women, 40,000 women in business. And through that network, my partners in the fund, who are 2 ladies as well, and I came across that women do need different financial, innovative financing. They need a different finance instrument other than bank loans on one side and VC on the other side. So we started designing a fund that invests using quasi-equity instruments, and we couple our investments with business development support. So we are running a gender lens fund, and when I say gender, it does not mean that we only invest in companies that are run by women. We just need to see that the companies are committed to equal opportunities. So a certain percentage of women in senior management, 50% of the workforce being women, of course, a woman as a founder or a co-founder. So it's or. And this is a $20 million fund serving Jordan for now, hoping to expand it to the region in the future.
That's amazing. Thank you so much for the introduction, everyone. I think this question will again go to everyone. So I would like to know, what are the categories of markets that interest you, and what are the investments so far that you've made, and which categories and which startups or SMEs in your case?
Yes, so we focus on software technology companies that solve real problems with AI, and we look proactively in digital health, education, and business-to-business SaaS. We've done 3 investments since February when we started. One is in education, it's Wise Nose. They're also active in Asia and the Middle East. and they have an internet for education. So the current internet is too complex for 80% of the people worldwide, because it's optimized for, and not suitable for education, because it's optimized for advertisers and written in a difficult way. So they select the sources that are suitable for education and assign reading levels. So yeah, they have huge global potential, and it's an amazing team. We invested in Test Gorilla. It's a HR tech, but to actually look beyond a resume and to really see what kind of skills people have and judge them on that instead of where they've worked. So we use it ourselves at the moment. We have an open position and we received over 600 applications. So it's really nice to be able to screen all the candidates on their skills actually. And we did an investment in Block Party. Their initial use case that they're building for is online harassment, which I think we all know is quite a big problem. But their end goal is to focus on online experience. And for us, obviously the team is key. There must be a nice product and there must be a market, but we all know that what you start with hardly ever is exactly how you end. So we need to make sure that this is the team that can make the vision happen and adapt to changes that will happen in the market. So
amazing. What about Kinga? We would love to know what's your interest in markets.
Sure. Maybe if I just go back to the introduction, though, I just wanted to say one more sentence. About 2.5 years ago, we also founded this platform. It's called European Women in VC, but it's actually a bit wider than Europe and Israel. And we invite women to be a part of a discussion around how to increase the number of women that are partners in VC funds, and that can either set up their own VC funds as partners or can be promoted inside legacy funds. And that is the goal, because what we are seeing is that the more women we have writing investment checks, the more likely that the female founders' ideas will get funded. So we have a platform like that. Please follow us. It's on LinkedIn when you look under European Women in VC, but it's actually, as I said, much wider than just Europe. So we have women from the US, from Singapore, from Australia. So, you know, happy to invite everyone on that. In terms of the kind of investments that we already have in the portfolio, I think what excites us still looking forward is deep tech. We very much like developer tools, for example. We have 2 investments which I would kind of consider under that umbrella: for developers, for data scientists, for data visualization. We have an investment which serves to find bugs inside code, for example. So we're looking at the more kind of IP intensive, R&D intensive software, the better. And we think that developer tools is very exciting because as the market grows, you need more and more developers, but they're simply not there. So the resources are always scarce. For many companies, we need to streamline the development process, make it easier, make it faster, and make it bug-proof. So around that area, and then same goes for data scientists. So we need that, we need prediction, we need data science, and they also are scarce as a resource. So we're very excited about that area. We have companies that are obviously software as a service, which is probably like at the end of the day, very, very many VC funds that have done very well on being very much data-driven, looking at geolocation, looking at advertising technology, looking at even some aspects of customization, direct-to-consumer e-commerce. We like those companies a lot. What we found recently is that gaming became very, very hot over the obviously pandemic period, but I think in line with that, what we are seeing is Central Europe is very much a gaming hub. with a lot of startups, a lot of mid-sized companies, and even some of the biggest companies out there are coming out from the region. And gaming is just growing through the roof. So there's, for example, a Polish company which is the same size as Ubisoft in terms of market capitalization. So we're talking about big gaming here. And we see a number of startups looking at the gamification element across various industries. So that kind of follows on. So then it's not just pure gaming anymore, but we can think about gamification of all kind of processes. There are inside companies or that are either B2B or B2C or whatever, but there's a lot of element in that. We also like to look at certain old school businesses, and this is something Fida said, as long as they're tech enabled, it's interesting. So in a way, we can find very, very traditional sectors. We have two companies in furniture. And furniture is a very traditional sector, but we look at it in one company from a B2C, in the other from a B2B standpoint. We have direct to consumer e-commerce in customized furniture. We have B2B customized digital products for shops. So we're talking about, in the end, a very traditional sector, but it needs to be brought into the 21st century and made tech-enabled. So I think this is similar to what Fida said as well. So this is more or less an area that really excites us as well.
Wow, this is so amazing. The gamification part, I mean, and I have a question to this. So what is the for gamification? Have we lost her? Oh, she's here. So the gamification startup, how much is the investment that you've made for the startup?
Well, what I'm just saying is that we see that many processes today need to be made more exciting. So in line with behavioral psychology, we're looking at even mundane things that are going on, which require some kind of excitement. It's a bit like point collection, reaching levels in different things. And this could work in the office. You know, like yes. People work in a call center, for example, and it's pretty boring to work in the call center. You have the same script, you talk to the same kind of people selling the same kind of thing all day. But you can gamify that and you can have prizes, you can have all sorts of processes behind that. So as an example, that would be a kind of a business to business gamification scenario. But you could have the same thing looking at more a B2C, collecting things inside shopping malls, a bit like Pokemon Go, if you think about it, but more from a business perspective. So I think you can fit this idea of being social, of looking at it from a kind of reaching new levels, looking at it also from bringing in more and more technology, whether that's virtual or real, because you can link the two worlds very easily that way. And I think this is a very interesting kind of, you know, still thing in development, still sector in development, that you can actually add this sort of entertainment element to get people more excited about certain mundane tasks or not very exciting things that are going on.
Yeah, definitely. And it would excite the new generation as well, that is Generation Z. So that's another thing. So yeah, over to Fida.
So where I come from, we don't see a lot of exits. Okay, exits are really difficult to find around here. And that being said, we don't either see a lot of tech companies going public. And that's why the fund was designed to invest in SMEs that have identified a growth opportunity and need capital to be able to pursue that opportunity. Those SMEs are tech enabled, of course, but they're across, I mean, we're sector agnostic. So we're looking at companies in the creative sector, tourism sector, education, healthcare. So we are really sector agnostic. We, of course, apply that gender lens element, and we have a revenue share component with the companies. So we take a small equity component, but we also take a part of that company's revenues during the next 5 years. This is how what we do is self-liquidating. So we don't have to go out at the end of the 5 years and look for an exit for those companies. I think this is, at least in our region, this is the nightmare for any VC, when year 4 is almost there, and then year 5 and the companies are still there. So at least this is how we're trying to work things out. So Amam, I just realized that I haven't mentioned the name of the fund. Amam Ventures, it will kick off in a couple of months. We were supposed to launch earlier, but of course there has been delays due to the COVID-19 situation. And we've screened so far around 70 companies. There are so many exciting, it's been a learning experience and so many exciting opportunities. But one thing that we came to realize is that SMEs and companies that are not in the technology sector need so much polishing and so much technical assistance support. So you don't find those companies ready with a pitch deck. You don't find them, their material, they need preparation. They need a lot of prep. So this was a very interesting finding, because where I came from, my background, and where one of my partners came from, because she came, from the darker side, from the VC world into this. So we're used to being ready to pitch to an investor. The material is ready, the deck is ready. And now we're meeting some amazing people who built real companies, and those companies have been around for years, creating jobs. They're profitable companies, but yet they want to grow. And yet they've actually never pitched to an investor before. So you need to actually go back to square one and work on all those things, just like a first-time founder in their first startup.
Wow, that was amazing. Also, I recently came to know that actually Jordan has a lot of startups coming up, and it has immense potential. It's the right time for the VC setup as well. Kudos on that. And I think so the next question would be, what is one of the major advice that you would like to give founders in order to, be successful in their application to you? Because that's something that in the audience, everyone would be like to listen to. So over to you, Fida. I think we should start from you now.
So I think I would say to show that they have not only skin in the game, that this company means so much to them. It's like, so I have four kids. So if I'm pitching to an investor, I think the investor needs to know that this company is a fifth child to me. So having skin in the game, being really committed, putting it all there. I think this is the number one, the attitude of the entrepreneur and how much they've actually invested themselves in their company.
Got it. Kinga, anything to add more to it?
Well, first of all, I'd love to see from my region companies that are co-funded by women more. The kind of companies that we can, as a venture capitalist, look at. Women are extremely entrepreneurial, but unfortunately, what they usually focus on doesn't match so well with the scaling, with the fact that we need to grow fast. And what they usually do is they set up amazing businesses, but they're more lifestyle businesses that are not scalable. So what I would love to see is more women become co-founders or founders of amazing technology companies. I'm very happy to say that actually our biggest investment is 3 males and a female as co-founders. So that's absolutely fantastic. I'd love to see more of this. And in terms of what we look at for the founders, I think, you know, we are coming from a region that has amazing technology, amazing skills for software development, but that technology is not consumed here. We are not a region that is at the forefront of technology change. We are not a region that will adapt fast and buy. And now I'm talking both on the retail side of the people and also of enterprises. So what we need to have is a kind of a coupling of this amazing technology, but the global outlook. The fact that these founders know from day one, they cannot find their customers here, because that's just kind of a proof of concept. Later on, they won't find them. So it's a bit like thinking globally from day one, but that is ever so important in the region where I am. I don't think you need to do that if you're American. Yeah, you think the opposite. You think, oh, I can consume the product, the service that I'm creating over in the US, and I actually don't even need to go out of this huge market of pretty similar people speaking one language. We're in Europe and we have other issues, right? We have all these countries that have different cultures, that have different languages. But I think all the more, if you're from my region, you need to understand that you won't find your customers here. And that needs to be built into the founder mentality. And the second thing I think we look for is honesty. We are teaming up with someone or a team that it's a bit like a marriage with a set divorce date. We kind of all know we need to exit at one point, but we need to have a lot of trust. And during the investment time, there will always be bad moments, but we need to be able to speak frankly to each other and without getting the ego in the way. That's not always easy. So I think this is also an important aspect, to be able to trust each other and to be honest with the problems that are ongoing.
Got it. I'm noting down all the points, so later on I'll just sum up. And over to you, Janneke.
Yeah, I think what is really important, that you are authentic, and that you bring across your message. So you often see on Twitter and on LinkedIn, like this, with this deck, these founders raised 10 million in 2 weeks or something similar. And but it's never the deck. If people raise that, it's a combination of who they are, the markets they are active in, the numbers they have. So I think it's really important to make sure that you think about how you get across your message, your story, and your passion. And that's what we're looking for as well, because the entrepreneurial journey is not easy, and it may seem glamorous in the media, but it's 1% glamour, not even, and 99% extremely hard work. So to make something successful, you need to be super passionate. And I strongly believe that entrepreneurs, when you're a real entrepreneur and you have the right idea, you just can't help yourself but to make it happen. And that's what I want to see. I really want to feel that this is the most important thing for you, and you are going to make it happen. And I think with these two things, you can get really far. And the ugliest deck can get you in a lot of money if you have the other two things. And the most pretty deck, but when you are just sitting there like, we will never invest. So don't try to copy too much what other people have done, because it never is what you think it made them successful. Just make your story compelling and bring that across.
This is super amazing. I think Kinga also said +1 to what you said. And so I just sum up for the audiences whatever that you guys have mentioned in points. So first is passion. Second is should have a very global mindset in terms of development. There should be no ego in the founders, should be very open-minded, authentic, and they should have a story to build. Yeah, the pitch deck doesn't really matter, but it's more about the passion and the authenticity that the founders get.
Simran, I think the list goes on. I mean, you can also, the team is extremely important. A sole founder with no team, with just an idea. I mean, I don't think many investors would be interested to listen to that story. When you talk to an investor, make sure that you have some traction, you have at least an MVP. So I feel like there's a long checklist that we can come up with, and entrepreneurs can go and look at the items just to avoid a lot of the mistakes that personally I have been through, and a lot of founders have been through. So speak to peer-to-peer mentorship is important. Speak to other entrepreneurs, understand how their journey was. Do your homework before meeting with the VC. Who are you talking to? What type of investments are they interested in? What stage? I mean, I came across a lot of companies that are, it's the same pitch for every single VC. Try to customize it a bit to work better to your benefits, depending on who you're talking to. I think Kinga and Janneke can add so much to that list as well.
Yeah, I think, the list goes on because in the end, it's a people's business. It's very hard to say it's this criteria, not that one. And I think that's why these kind of qualities, sometimes they can go one way or the other. It's like with the ego thing. You need a founder who's going to be the one driving the process. He needs to be very strong in terms of ego, but then he needs to also listen to other people and get feedback. So finding the right balance between these two things, it's always not easy. And that's why teams also are better, because one person can be complementary to the other. And I think this is also the case for funds. Funds also are made up of people in a team. They have an investment committee, and this is why some of us see things that the others don't see. So this is also important. But just to add to what Fida said, I think 20 years ago, we didn't have the resources we have today. And you're a starting founder, you can just watch so much, especially now with the fact that technology and kind of wisdom, knowledge, network, this is all really come online with COVID. The accelerators are online. It's never been this easy to get into an amazing accelerator as it is now, because they've moved away from the real batches that are taking place in where they were geographically. They've moved online, and it's much easier to get in. So looking at YouTube presentations, getting into accelerators, but even setting up meetings online, 15 minutes with a mentor or another founder who's seen the same thing as you want to do, or has had a similar experience, has never been as easy as it is today. So all you need to do is get on LinkedIn and reach out to someone. And sure, people are busy and everything, but it's never been this easy. So I think we should really, as a technology-focused sector, say we are very lucky in this respect, that we can think globally, we can work from our homes, and we can reach out to each other very easily, gather the knowledge we need to move forward. There are very many pluses in this, I think. I think we're very lucky.
Yeah, and I think maybe to add, because what you should be wary of is there's many startup advisors. And some are super useful, some are not. But I think when you're speaking to VCs, it's really important that you are the one telling the story. I've had it a few times where a founder brought an advisor to talk about the finance side. But as an investor, I expect you to know the numbers and to know why the numbers are the numbers. It's so core to what you're doing that you should not look at an advisor to explain that part. And you don't need to know everything. I mean, if you have a CTO, it's fine if he or she is answering the technical questions. but there's a few things about the company that, as the one doing the conversation, you really should know, and make sure you don't leave that to advisors.
This is some really good advice. I think a lot of, I did that mistake when I was actually getting funding for my startup. So thank you for that. I think my second question on this would be, so apart from giving finance to the startup that you're funding, what else do you guys actually do? Do you guys also mentor them or help them in marketing? What exactly do you guys do apart from the fund?
So we work with operating partners. We believe that the founders that we invest in are amazing and that they can do it themselves. But we know from experience, if you get support on the right topic, on the right moment, you can grow better and faster. So we have people for topics that we think are crucial, data and engineering, product, story, diversity and inclusion, and people. And of course, on tailing a team and scaling, we know a lot ourselves. And what I think where we are really different is that we are easily approachable. And I think for founders, sometimes it's a really small question that if you just take the call for a few minutes, you already help them further. And what personally for me is really important to also be sort of mental support. I think being a founder, even if you have a co-founder, can be really lonely, and it can be really tough. And I think as a founder, and I've seen it with myself, you easily forget yourself because you're busy, you have to do certain things. And so I try to make sure that I keep an eye on how they are, and that I also ask about that, like, how are you doing? And how are you handling? Do you have certain worries? Because things can grow really big in your head, unnecessary.
Got it. Kinga.
I think, that there's various areas that we look at. One area is technology. I think this is quite unusual for funds from Central and Eastern Europe, from Europe in general, to be so focused on the tech side. In the US, each and every fund will have a partner who's an ex-CTO of a large technology company. In Europe, that has not been that much of a push. So we have one of the partners who's software engineer turned entrepreneur, exited his company in the US, and now is a regional director with Microsoft, focusing on AI and cloud, which means that we can do the due diligence in-house, but it also means that we can help with the technology roadmap going forward and bounce ideas, but we can also just have his team sit down and code things if necessary, or find issues, or guide the startup to relationships in the US that I think would not be otherwise accessible. So it's nice to be in a big network. So I think that's one thing. The second thing is, we know that there are lots of problems with HR. HR is always a big issue. As the company grows, it's difficult to find very good middle management. It's difficult to find general people are an important asset, and it's hard to find the right people. So we try to help with HR as we can. We try to identify the gaps early enough and discuss them with the founders and help them get the right people on board. And remember, also, our founders have a lot of presence locally in some of these countries, but not necessarily the networks out there. So this is another thing that for us is super important. And thirdly, we get involved in certain operational issues if they ask for it. So we don't want to kind of provide unsolicited involvement or help, but when they know they actually need something, then we can get usually one of our investors or one of the people that we know and work with to help out in certain aspects of operations, processes, streamlining certain things, or something very particular, like, for example, pricing advice. So you have a software as a service product, and you're thinking, well, how do I price it? I've been testing things, but really, how do I do it? And pricing, for example, is a huge revenue push. So it's a huge revenue driver. I mean, that is revenue, right? So we could also, and we have done this in a few cases, focus on a very, very small niche operational area and try and help out with that. I think that I hope that answers the question.
Oh yeah, it does. You mentioned a very important point, that is networking, and that's something that a lot of VCs do. But yeah, I mean that's something that's really great. Fida.
Yeah. So I think because of the nature of our fund, we do things a little bit differently. There's a lot of the business development support that we need to extend is front-loaded. As I mentioned, most of those companies have never pitched to investors before. So our technical assistance support is basically divided into two categories. One is for the larger ecosystem. So for companies that fit our criteria, for companies that are committed to equal opportunities. So we provide workshops on design thinking, on digital transformation, how to get into a growth mindset, financial planning, and so on. So those are workshops that are, not necessarily for the companies that we invest in, but for companies that could potentially become pipeline to us or to other funds as well. And then there's the specific business development support that we extend to our companies. We started with a needs assessment, and out of the needs assessment for each company, we come up with a customized roadmap. And then we really believe in spider webbing and collaboration. So we look at who are the subject expert matters on the market, and we bring them on board. So we have a CEO coach for each of our founders. We connect them with industry experts or subject expert matters on certain challenges that they need. And then us as individuals, we are here to support them whenever they need any additional support from our side.
And Simran, there was a question from a lot of over the email. There were a lot of early stage startup founders who would want to raise funds, and they approach a lot of investors, and investor says no. So what do you recommend? And what should be their approach so that they get better response, or what kind of conversation they should have so that becomes more useful? Else, what happens? Some startup would say, I approach 100 investors, and they've said no. But that process is not helping. Either investors are not giving the feedback, or the startups are not asking right questions to those investors. So what would you recommend those early stage startup founders in that context? Janneke.
Yeah, sorry, I couldn't. You were dropping off a little bit. Can you repeat the question?
Yes. So there are a lot of early stage startup founders who would want to raise funds.
Yes.
So what would you advise them on how they can approach investors?
The problem is a lot goes via networks, so introductions, and I think that should not be the case, that it should always be an introduction, because great founders are everywhere, and in our case you can just approach us through our website or through LinkedIn, and we will look at the deck. And we are also going to put our technology online so that people can go through the analysis, and we decide to have further discussions with them based on the facts, because we think bias and network now play too big of a role in the whole process. Well, yeah, as I mentioned, there's amazing startup founders everywhere. So I really think it differs per VC, what is the best way to approach them. And unfortunately, now that there's no events, it's more difficult to just walk to people and say, hi, this is me, and do a quick pitch. So I think that really disadvantages minority and female founders. You need to be creative, but there's only so much you can do online. So I think email and LinkedIn just work the best. Unless you can get an introduction through somebody, then that works really well.
Yeah, I would add to that. Actually, Janneke, you've picked up on a super important point, is this idea of referrals and networks. Because obviously it's best to be introduced by someone, but as you said, it's not always possible, right? And this is what we are seeing in ventures, that actually this networking to this degree has caused the current imbalance in the market, because it's all a kind of 35 to 45 boys club in the end. And in the US, it's very, very obvious. They've even all gone to the same schools. In Europe, we're maybe slightly diversified, but at the end, we're still looking at a very tightly knit network. And so stepping away from that is already something that's quite difficult. And people tend to invest in people who are like them. It's a psychological thing, which is not good, because that leaves money on the table, that leaves a lot of missed opportunities. And I guess this is something that also is a topic for today, how to be able to invest in especially diverse companies, women-run companies, companies like that, that are serving certain sectors in the market, which really need now investment, because they're actually good for the world. I mean, just think about health tech. There's lots of differentiation in the approach, but not all of these projects get funded. But we need them because we want to have personal medication. We want to have all these things. So huge element to try and kind of jump across. So I think that what is very good for this is accessing mentors and accelerators at the early stage, because they already put you in a kind of a network and people know people. So it's just good to get into that crowd, get feedback as early as possible. So that's one thing. Another thing is that as a founder, I would ask myself the question, do I need an investor? Because the best money is not investor money, it's client money. Customer money is the best money. So if you can get by bootstrapping, if you can make your first sale very fast or your first 10 sales, then the right time to get an investor is the moment that you want to replicate what you're doing, just faster, better, more scalably. And that is actually this huge plus, right? Because I think that also we're kind of in this world where people say, oh, I'm doing a technology, I need an investor. That's really not always the case. And I think there were some statistics about American companies versus US versus Europe. And it turned out that Europe is full of really successful companies that never reached out to an investor. And that's really amazing. So kind of if you think about it, it's a very small number of companies that fits a VC profile. Everyone else can bootstrap, build their business, go to their customers, and try and build what they're doing in a very organic way. And I think that's absolutely amazing. And I'm super happy seeing founders that have done it without the investors, or that have built the scale and reached out to the investors at the right time when they needed it.
Well, and I think to add to that, it's indeed, maybe you don't need an investor. That's the first question. But also, do you want a VC on board? Because you should really ask yourself, is that the path I want to take as a founder? Because when you go the VC route, there's certain things expected from you in terms of growth and exits, and maybe that doesn't fit you as a founder. So that's a question I think you should always ask yourself first.
Absolutely. To add to that, I came across a couple of years ago a very interesting piece on unicorns versus zebras. So while VCs are looking for unicorns for the next billion-dollar company, for that, companies that want to grow at all costs in the fastest way possible, there are also zebras, which are companies that don't necessarily want to become the next Facebook. And I think this is what we are looking for in Amam. So we're looking for the zebras. We think that they're real versus the unicorns. They balance profit with purpose. And maybe it's a question that as founders, you should ask yourself, what type of money is suitable for my company? And again, it could be customer money, it could be a bank loan, it could be patient capital, it could be from specific funds that cater to SMEs. And so it doesn't have to be, not every single founder have to have that ambition to become the next unicorn. So if you just take a moment and really think about what exactly is it that you want. Do you want to spend the next 5 years working on this company, growing it and exiting it? If this is your dream, then yes, definitely go talk to a VC. If you're building a company and you see yourself running it 10 years from now and maybe passing it on to your children, then maybe it's not a VC that you want to talk to. Okay, so I think you need to be honest with yourself as well and answer those questions.
Yeah, that's right. I think that also a lot of people don't think about funds, that as soon as you get an investor on board, he is there to exit. He's there to make money for himself and his investors. And they think it's a kind of, well, it's good to get an investor on board now, maybe I'll get a second one later. And then they're not thinking what's going to happen next. And I think it needs to be made very clear that the moment you get an investor on board actually means this is for sale. Because if someone else comes at that time and gives you the right return, you won't hesitate. And I think this is something that needs to be super clear, that as a founder, yes, you should be thinking long-term, you should be building the value and thinking in strategic steps, and building the value for yourself and then for the investors. However, you have brought an investor to the table who has a mindset of managing other people's money usually. So, and that entails a time frame, that entails a rate of return, and that has certain bells and whistles attached to it. So, and you can't ignore that. So I think being very clear on what it means to get, it doesn't matter if it's an angel investor, a VC investor, or a private equity investor in the end on board, there needs to be a time when that person is monetizing their investment.
Yeah, absolutely. These were some amazing advices by everyone. And we are towards the end of the session. So if there's anything that you would like to suggest to the entrepreneurs, early stage entrepreneurs here, or there's something that we missed out on, you guys can just say it and we'll just close it. I know that you guys have given your precious time to us. So 8:55 we'll close. So just, yeah, if there's something that you would like to say.
Well, if I could, I mean, there's one thing I'd like to say is that I think there's never been a better time to build a company. And building out is still cheap. It's cheaper than it was a long time ago. You can work in dispersed groups. You don't need to be all in one place. You can do all kinds of hybrid global companies with people just being in different places, working from home, being nomads. This is possible. There has never been such an uplift in technology acceptance as there has been over the last few months. So the jump that we are doing now, and we are seeing it happen, had taken years before. We're reaching digitalization so fast. And we're seeing that it needs to happen in more and more kind of old school sectors. Janneke mentioned education as one. I mean, that is a huge sort of, I don't know how you call it, backward, very, very laggard sector in terms of how it works. And even if you're introducing a whiteboard instead of a blackboard, I mean, come on, we're light years away. So I think that COVID is also speeding up acceptance and revenue growth for certain parts of the market. And if you are in that place, you can really grow very, very fast. So it's not a question anymore of not having access to capital or to resources. They're there. If you have a great idea, then there's no better time than this. And if you set up a company during a difficult time, for sure you will do so much better when the times get less tough. So I would encourage all those out there with ideas, just do it.
So just do it. That's nice. Okay, then. So I guess thank you so much, guys. I think Jatin, you're here?
Yes.
Yeah.
Thank you so much, everyone. With this, we'll just end the call and look forward to seeing all of you over social media. And I already mentioned the LinkedIn profiles of our panelists. And so in case if you have any more questions, you can ask them. Thank you so much, everyone.
Thank you, guys. Nice meeting you. Bye-bye.